Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis view of the S&P 500 index over the short term. But as usual, we will start with the major structure over the monthly chart. And here we go. The monthly chart is showing a very big black Japanese candlestick indicating sellers are in full control because the candle is showing very tiny shadows, and this is indicating that the opening was near the high and the close is near the low, and the month is approaching its final third. So at least until now the sellers are still in full control. Over the weekly chart we can see the medium term is downtrend, and this medium term downtrend is formed by lower highs as well as lower lows over the medium term since December and January. But we do have some increased negativity, and the sellers are gaining more and more control, and we can see here the Japanese candlesticks are indicating increased selling pressure in addition to a downward price gap during the break of the channel line to the downside. So after the channel line is broken with a black Marubozu candlestick and a downward gap and a complete weekly close below the channel line, this is indicating that the index is turning from bad to worse. Things are getting ugly in the S&P 500. So the target, the medium term target of this break is as follows. The thickness of this downward channel line or downward channel or downward trend is added to the level of break downward. Then we can draw a parallel channel line, second channel line, running at the same thickness to the downside, indicating that the short and medium term targets for the S&P is around 3,400 points, which is also considered the channel line of the monthly chart being tested from the upside. I don't think it will be effective, but take into consideration that there is a slightly strong or relatively strong monthly support around those areas, and this is coinciding with the channel line, second channel line running at the same zone, which may create an area of support at least temporarily before it resumes its downward correction. We cannot forecast what will happen around that area because it is too soon to expect what will happen there, but at least until now signs are showing that the S&P 500 is under increased selling pressure over the short term also. Let's dig into more details over the daily chart. And here is the picture is becoming much more clearer. The microscopic picture is showing that the index broke to the downside, both the channel line, the downward channel line, and also it broke a relatively short-term support, and both were broken with a gap and confirmed the break with around 3 or 4 sessions. The final one of them was the close of the week on Friday. So any correction in the market to the upside is considered against the prevailing medium-term downtrend and is considered short-term and is considered high risk, and it may be used to decrease losses and minimize any losses and start hunting and chasing signs and signals for virtual trading on the short selling side. The view of the S&P 500 is negative as long as it is below the 3,900 mark, which is considered to be a zone of around 100 points more and 100 points less. This zone will act as a resistance area against any move to the upside over the short term. That's why we are going to consider any move to be against the prevailing trend, and we don't recommend trading counter trend. That's why you should wait for the move to fade away, and we expect it to fade away around the zone that we have just highlighted in red. Maybe it's starting from 3,800 up to 3,900, little bit more, little bit less, but you understand that's the area of expected resistance. If the S&P managed to break above these levels and manage to get a weekly close, only then we may say that it entered in a short-term corrective wave, which can be relatively having a relatively far target around maybe 4,150, or the previous weekly resistance around 42.47, which is too soon to predict such a strong corrective wave to the upside. Until then, the forecast is showing that we do have still lower targets on the way, as we have said that the thickness of this channel line, when we expand it to the downside, we may reach 3,400 over the short and the medium terms. So keep in mind that the picture is bearish as long as it is below the mentioned resistance zone. Thanks for watching, and keep in touch as we are going to update the index every weekend as usual. Please feel free to subscribe, like and share, and see you soon.